Hi, everyone, and welcome to our very short lesson on economic concepts. So let's get started here. So we're going to switch over to a quick switch. So economic concepts. So economic concepts, what are they? Well, economic concepts are the basic ideas that every entrepreneur or business manager needs to know. Knowing these concepts gives the understanding of how a business is performing. Most of these are essential vocabulary terms, but some also involve financial math, and they essentially fall under three categories: costs, revenue and profit, and income. So let's take a look at each one of these, starting with costs. So now the definition of costs is the outlay or the expenditure as of effort or sacrifice made to achieve an object. Some examples, there are startup costs. These are expenses incurred during the process of creating a new business. Next is operating costs. These are expenses associated with the day-to-day maintenance and administration of a business. These can also be referred to as cost of goods sold, COGS, or COGS. One important operating cost to be aware of in your business is payroll. This is the money that is paid to employees for work over a set period of time. Next is revenue and profit. Now, the definition of revenue is profit. They might seem like the same things, but they really are actually different, even though they are related. So, some examples. Revenue. Revenue is the amount of money a company brings in through the sale of its goods and services. And this is the selling price multiplied by the number of units sold. Profit is different because this is the money a business earns after subtracting all of its expenses. It's the financial gain or reward a business receives for its efforts and successful operations. Finally, there is income. This is the amount of money, property, and other transfers of value received over a set period of time in exchange for services or products. Some examples include your operating income. This is the amount of revenue remaining after deducting total operational expenses. This money could be saved, it could be reinvested back into the business, or it could be used to pay off any debts. Next is net income. This is the money a company or an individual has remaining after subtracting all of the expenses from their total revenue, this representing the profit or loss over a period of time. And so that is our quick lesson on basic economic concepts.